Hello everyone and welcome back to my channel. As of every week, we will dive into the fundamental sentiment and technical analysis of different currencies to incorporate and merge different currency pairs and see whether there is a trade opportunity coming into the next week. Now, since if we go to the Forex factory and we see the next week data, there is a lot of bank holidays, so I expect that there will be no volume, neither volatility dropping in the markets. So I will take it also a week off to come stronger in January. Also, I added some seasonality analysis, and some COT data analysis from commercials, large speculators, and index that they use on the website. And during the previous week, there was a lot of updates, a lot of fundamentals changed, and hopefully on January we shall see these fundamentals folding out and giving us trade opportunities coming into 2025. If you like this type of content, don't forget to subscribe and hit the like button for weekly analysis like this. Now, let's start with the fundamental analysis. If we go into previous week's data, we got the GDP growth rate lower than expected, final lower than expected for pound, and the Canadian better than expected. We've got also some meetings from the Reserve Bank of Australia, the Bank of Japan. Also, we've got the unemployment rate for the Japanese country. So some data, it changed the fundamental mathematic calculations in my Excel sheet. Also, if we come into the sentiment area, there was increase in the tendency of Japanese yen. It was so it was around holding the interest rate or below the interest rate, and now the 3-month yield increased by 0.09%. And based on these data changes, we've got the final economic indicators analysis, so final fundamental and some of the sentiment analysis, that the Japanese yen got stronger and the Australian dollar got weaker. Also, the USD is still strong because the Fed lowered the cuts expectation coming into the 2025 year. So there is a high probability that the USD will keep appreciating. Also, we can take a trade opportunity where the USD is appreciating and another currency is depreciating, or there is rumors that it will depreciate. How I use now seasonal tendency and seasonality to have more confluence in the trade opportunity that I take. If we go to the seasonal tendencies, US dollar right here, in January we go down, we have an increase, appreciation based on the long term, and based on recent 2 years, huge appreciation in the US dollar. Just the 5 years had some problems, but based on the overall seasonality, it will be an appreciation for the US dollar. Let's take another week example right here, like the euro or the Australian dollar. So I come to the seasonality I go to the Euro FX, I go down. In January, based on recent trends, there is a probability that the market of euro will depreciate, even if we go and see the charts from January till February. In the past 2 years there was a huge drop and the others had some depreciation. So Euro USD, good short opportunity based on fundamental analysis, based on seasonal tendency, and based on sentiment analysis. Now we go to the COT data to see if large speculators are positioning themselves with the seasonality and the fundamentals. Now, from net positioning perspective, there is a lot of short positions more than long positions. So large speculators are more short than longs, but based on the change, they are taking out short positions and taking out long positions. When we start with the first 3 weeks of January, we shall see if this will align with the seasonal tendency and with the fundamentals, and then we go to the technical analysis based on the daily charts right here. We've got this beautiful supply zone. If we come into this area, we reject and fundamentals stay the same or even get stronger, and seasonality will be the same. The COT data on the first week or the second week of January aligns with what we have from fundamentals, from 3-month yield, and from technical analysis. There is a huge opportunity to take a short position on Euro USD. Let's take another example. Let's say we have the Japanese yen is strong and the pound is strong and the Australian dollar is weak. So let's take the extremes, which is pound Australian dollar. We come right here. Now let's mark this because it's important. GBPAUD. We enter. Pound Australian dollar is already moving higher, so we need some retracement into different areas to see from a technical perspective to take a long position. Now, from a seasonality point of view, let's go to the British pound. You go down. Based on the average, if we see on the charts, there is not a huge increase except for the past 5 years, and it's almost a consolidation or a small increase at the end of January. So we might see retracement at the beginning, at the week and half of January. Then we might start see appreciation of the pound. Going to the Australian dollar. Australian dollar, based on the 10 years, we get some appreciation, then consolidation. Based on the 5 years, appreciation, then some consolidation. And based on the 2 years, you see there is a huge depreciation on the Australian dollar, and it was, I think, because of China not getting good economy, and also Australia not having good economic fundamentals. So it's, from a seasonal perspective, not a big fan of this trade, but from a fundamental perspective, a huge fan of this trade. Then we go to the COT data. Pound right here, long positions are taking taken out and short positions are taken out, the net positioning is still bullish, and the index is giving me a long position on the British pound. Let's see the Australian dollar. A huge increase in short positions and taken out the long positions. So from a COT point of view, GBP Australian dollar is a buy signal. Right here, from a technical perspective, pound Australian dollar is a buy signal. From the fundamental perspective, pound Australian dollar is a buy signal. Seasonality giving mixed signals, not very clear signals whether it will be bullish or bearish, but the overall probability is that the pound Australian dollar will appreciate. So what we do, we see a supply or demand zone that price will likely retrace into it before continuing the push higher. We have beautiful area right here, a demand zone. Also we have a demand zone at this area. Now when we come into this area, if there is any economic indicator, important economic indicator for the pound or the Australian dollar coming out, and it came out good for the pair to buy, usually I will be taking the position after the data comes out and the momentum should start moving higher. So this is how I think about trade opportunities. This analysis I do on a weekly basis, and I upload videos like this on a weekly basis, and every week, 2 weeks to month, I try to update my Excel sheet to learn new things and to try to add it into my strategy to have more confluence and high probability of winning a trade. Also, I trade an FTMO account as a scalper, not as a swing trader like on the live account right here. If you like to watch these type of videos, live trading, so I upload videos where I live trade. Also, I will keep a link up on the right screen to see these type of videos from previous weeks. If you like this type of content and this type of weekly analysis, don't forget to hit the like button and subscribe so you don't miss out every week. Until next week, stay safe and Happy New Year.